Hello, everyone. Hope you're having a great Saturday, and thanks for taking your time out to join us this morning. And welcome to the Specialist Trading Educational Presentation. Now, today I'd like to talk to you about a statistic that is correct over 80% of the time. Now, if you've been following me for a while, I've made no secret of it. I don't believe in statistics, and all of our strategies and methods do not carry any stats with them. The main reason is because I've traded systems before which are required to have statistics. That's where you get the statistic from, because they're required to do the same thing each and every time. In other words, you have to buy at the same place, sell at the same place that the system determines, and that's how you come up with a stat. Now, I have traded with trading methods and systems that have generated statistics. In fact, I was even asked to be someone for a company to trade the actual methods and strategies that generated statistics. And these went back a good 10 years, and the stats were amazing. Very small loss and drawdowns. They had tremendous winning statistics. And I traded them for a while, and guess what? Each and every one of these systems blew up when the market changed directions. Okay, so when the environment changed, all the statistics went out the window. So it was at that time that I realized that, there's really no type of consistency in relying on these things, because the market does what it wants to do. And even if you went back 10, even 20 years, and it had tremendous favorable statistics, if the market decides to do something that wasn't correlated with forming these stats, everything goes out the window. Now, because of this, I wanted to give this presentation, and that's why I want to start out by sharing with you the only statistic that I really look at. Out of all the statistics, there's only one that I have found that is consistent throughout the years, regardless of the market environment, regardless of what happens, regardless of what type of trader you are. This statistic has been proven right all along, as long as I've been trading for the 40 plus years, okay? Now, I want to share this with you right off the bat, and your eyes are going to open up for those of you who haven't heard of this stat before. And for some of you, it may be rather frightening, but don't worry about it, because it is the facts. So I want to start out with the facts. And the facts state that 80% of all traders will lose money. All right? This is the only statistic I look at. And this usually happens within your first year of trading. Now, when we say lose money, we're not talking about having a bad year or a bad couple of months. We're actually talking about losing 80%, or I should say losing everything that you've put aside for trading, 80% of all traders. So let's say, and we have close to 100 people here today. So let's say out of the 100 people listening this morning, 80 of you will lose everything, okay? This is an alarming statistic. So the facts also state that 15%, roughly if we have 100 people here today, 15 of you will just break even, okay? Now that's really not bad, thinking if the market conditions are terrible, you won't lose anything. You'll just basically be treading water. But for all your hard work and effort and time, and most especially money, you won't really see any results. So ultimately, this means that only 5%, if there are 100 people here today, roughly 5 of you will just be consistently profitable. Okay, that's it. Now, if you want to see what that looks like on a pie chart, think of it this way. That large portion in red there represents the 80% of you that will ultimately fail. That blue part represents the traders that will break even, and that small sliver in green represents the amount of traders that will be consistently profitable. All right? Now, I know it's alarming. I didn't want to scare you early in your Saturday morning, but these are the stats that have been correct as long as I've been trading and going prior to that. So we have to ask ourselves, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? Now, it took me a while to grasp this concept, but I truly believe there is an infinite amount of profits to be made even on a daily basis. So many traders look at profits as if they're just, there's only so much to go around. Almost similar to saying that there's only so much oxygen going around. That's in my opinion. I used to think that way as well. A zero-sum game with all trades. For every winner, there's someone losing. But after trading for a while, I realized that that's similar to thinking, well, for every breath I take, someone is losing a breath. There's enough oxygen to go around that you don't have to think that way in a limited type of concept. And it's the same way with trading. There are enough profits on a daily basis to go around. It's infinite. It's just a never-ending amount of profits. But why is it that a small percentage of traders are able to capture that? Well, it really is not that difficult. In fact, it's rather simple. These traders, whether they know it or not, they know the importance of being in sync with the market. You see, that's what it's all about, being in sync. Now, I know most traders, myself included, when I first started trading, when I had a miserable time my first year or two, I thought I was being in sync with the market. I thought, well, everything I've been trained and everything that I've been taught was in order to get me in sync with what the market wanted to do. For example, if we look at this chart here in UI, this is the way I used to make my own analysis, and I think the majority of traders make their own analysis when looking at the market, whatever time frame. It really makes no difference. For example, someone looking at this would say, well, we're making higher highs, higher lows. That's the perfect definition of an uptrend, right? So at this time, the market was going up, but then all of a sudden, we met some type of resistance. Either it was some type of maybe Fibonacci resistance, maybe it was the institution selling, maybe it was some Elliott wave, whatever you decided. There was some resistance here because we couldn't get through that point. And then on top of that, look at the pattern recognition. We had a bearish engulfing pattern right here. In fact, we had another one just a couple of bars later. So with the resistance and then with the candlestick patterns that are negative, what was your ultimate analysis? Because we're making lower highs and lower lows on top of that. Well, the ultimate analysis would be the market is going lower, right? We're at the beginning, most likely, of a downtrend, and we're not going to go up until we break that resistance. So my analysis would be, why don't we sell? Okay? Most traders would look at it this way too. And look what happened. All right, look familiar to anybody. All right, remember, the goal is to be in sync with the market. That's what separates that 80 percentile from that 5% that are constantly, making profits. So being consistently out of sync with the market is at the root of all your losses. Think of it. Whenever you lose, it's because you're doing the opposite of what the market wants to do. If you buy something and it goes down, you're out of sync. If you sell something and it goes up, you're out of sync. Trading is really that simple. It doesn't have to be, well, the market, because the earnings came out and the estimate was out of line with, don't overcomplicate trading. Or, well, that buy program went on the minute I sold something. It doesn't have to be that complicated. Trading is really simple. It's the trader that makes more things complicated than they have to be. It really is. The common denominator is you are out of sync. Well, what if I told you there was a tool that was designed to automatically put you in sync with the market, regardless of what market there was? Could be futures, Bitcoin, commodities, currency pairs, stocks. Doesn't matter what time frame, doesn't matter what direction. Well, here's the good news. There actually is. Guess what? You have access to it right now. So that's what we're going to be talking about today. And we're going to show you a ton of examples using the PTS Primo charting platform. This is the educational platform that actually puts your trading in sync with one click of your mouse. So welcome. This promises to be a great educational presentation today. My name is Steven Primo. I'm the president and founder of Specialist Trading. About 12 years ago, I teamed up with Proprietary Strategies with one goal in mind, and that was simply to educate traders around the world. And I'm happy to say, after 12 years, we have students in over 115 countries around the world and in every state in the United States. So good to know that we're educating traders. We've turned a lot of traders, results around to being losers for, many years to actually being consistent for the very first time. Now, I know a lot of you would say, well, Steve, if you've been trading this long and you're a very consistent trader, well, why don't you just tell us what to buy or what to sell? And this is, I've always given this speech, and think about it. The entire industry is based on that premise, where you go to a chat room, you go to a trading room, or you sign up for some blog or listen to some guy on TV or wait for the earnings. And those things are supposed to tell you whether you should buy or whether you should sell, right? Now think of it. This has been going on for ages. I mean, when I first started trading in the 70s, the same process was included. I mean, we were taught to mirror someone who was successful. So why is it that this statistic is still true? 80% of all traders fail. If that's supposed to work so well, following someone who's successful, then why do most traders fail? Well, it's obvious that that doesn't work. You see, every trader comes to trading with different risk parameters, with a different persona. Some traders like to trade 50 times a day. Other traders like to trade once a month. Some traders like to only trade long signals. Other traders like to only trade short. So you see, everyone has a different trading persona. And in order to bring that out, you have to educate yourself and not follow someone else, but follow your own trading persona and learn how to be in sync. So it would be doing you a disservice to say, oh, you should buy this today or sell this today, because my goals and my risk parameters are entirely different from yours. That's the only way I have learned in 44 years of trading that traders become consistent. And when I traded on the floor of the stock exchange, I started my career on the floor of the Pacific Stock Exchange. I was on the floor with numerous traders, hundreds of traders. Many of them made small fortunes in a relatively short amount of time, anywhere from days to weeks, hundreds of thousands, if not millions of dollars. And not one of those traders is still trading today, probably just two or three, including myself. The reason is because they were listening to outside sources and they couldn't be consistent to hold on to those profits. So what we're trying to do is teach you things that have stood the test of time that will make you a sustained, consistent trader. And the only way to do that is by educating you so that you can ultimately make your own trading decisions. That's why we don't have chat rooms here at Specialist Trading. That's why I'll never tell you what I think the market's going to do. Point in fact, I have no idea what the market's going to do. I just simply follow it. And I'm going to show you in today's presentation how you can follow it as well. Okay, now before we begin, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this tool to see what the market direction is and to be in sync with the market. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, all examples are strictly for educational purposes only. Now, a number of prospective students and people have always asked me, well, Steve, why do I have to wait for these weekly webinars? Can I get more education quicker than that? Well, yes, that's why we have a Twitter page. So we invite each and every one of you to follow us on Twitter, because I'll post different things, educational things on a daily basis. I'll post signals that our strategies have generated and share with you just a little bit of information and the basis of why they were generated. But these are not signals. We're not telling you when to buy or when to sell. They're trades that have already taken place. And just showing you what the basis is for those setups. Also, little bits of financial wisdom on a daily basis to help you along with your trading. So lots of great free education on a daily basis. Please feel free to follow us on Twitter. Now remember, we are, first and foremost, an educational company. If you come here today thinking that, well, this guy's going to tell me if we're in an uptrend or a downtrend, or he's going to tell me what to buy or what to sell. In fact, someone once on my Twitter page, this was just last month, said, Steve, why don't you give me the best 5 stocks that I should buy? And once again, that goes entirely against our philosophy. That is a recipe for disaster. That's what just about 80 to 90% of all websites do. And that's why most traders fail. I don't want you to join that 80 percentile. I'd like you to join that 5% of traders who are consistently profitable. And the only way I can do that is by educating you. So if you come to our website, you'll see that my goal is not to trade for you. It's not to tell you what to buy or what to sell, not to tell you the perfect time frame. I get those emails consistently. Steve, what time frame should I trade? Or what do you think of this market? That's just coming from someone who's used to that concept of following. But my goal is to teach you how to trade with the specialist edge. It's the same edge that was taught to me some 44 years ago when I was struggling with my trading. It was taught to me by my mentors on the floor of the stock exchange. And hopefully it will be able to sustain you as well. Remember, trading is really simple. It is the trader who makes it more complicated than it has to be. And you'll see that in today's presentation, how simple it really is to be in sync with the market. And some of you will be amazed. Some of you have taken this course before will say, well, yes, I follow this and it's really helped. Okay, now before we begin, we're going to start in just a few seconds. Remember, I want you to ask me as many questions as possible, but please wait till the end of class to ask questions. I promise I'll get to each and every one of them. Oftentimes, though, if you wait for the very next slide, your question will be answered. So if you have a question, just wait till the end. The only question I do answer in advance is this one. It's the most common, and that is this being recorded? Yes, each and every one of our free webinars we give on a weekly basis is recorded, and each and every one of you will be sent a link to this recording so you can watch it later on today at your own leisure. Okay, so if you happen to miss something or didn't understand a concept, you will see this link to this recording sent to you, and you can watch it as often as you like. All right. Okay, so if we have a good crowd here today on a Saturday. Remember, if you have questions, please wait till the very end. And I'll promise I'll get to each and every one of them. Okay, so with that stated, let's begin today's educational presentation. Now, remember, I said, what if I told you there was a tool that was designed to automatically put you in sync? Well, there is. And remember, you already have access to this. And I'm sure you're saying to yourself, wait a minute, this is some indicator? Is this some formula I have to calculate? No, it's really simple. It's called the buy-sell line. All right, this is not something that you have to spend $5,000 for. This is not something that you have to calculate on a daily basis. You have access to it already because the buy-sell line is just the 50-period simple moving average. So regardless of what platform you have, even if you're looking at something online through your broker, you should have charts that are able to plot the 50-period simple moving average. Now, I know many of you are already plotting this on your platform or on your charts. But here's the difficulty. Most traders use this incorrectly. All right, they use it as something to help them initiate a trade or something to give them a signal. Here's the proper way to use what we call the buy-sell line. In order to use it correctly, all you have to do is ask yourself this question before each trade. And that is, where is price in relation to the buy-sell line? Okay, I've said this before. I'm going to say it again. That question is so important, I'm going to repeat it again, and I would actually suggest that you write that down on a little Post-it and post it on top of your computer screen. Because I don't care what strategy you're trading. We're not going to talk about strategies today. We're not going to talk about signals. We're not going to talk about systems or how to properly identify a buy or sell signal. What we're talking about is being in sync with the market. So even if you're certain that your strategy is better than anything you've ever seen, fine, that's great. But before it generates a signal, before you actually push the buy or sell button, ask yourself, where is price in relation to the buy-sell line? And if you ask yourself that question before you pull the trigger, you only come up with two possible scenarios, because if price is above, then you should only have a buyer's bias. That means if your strategy generates a sell signal and price is above, the odds are you should not take it. Okay, because over time, you will not be consistent. Now, conversely, if price is below, you should only have a seller's bias. So if your strategy generates a buy signal because you went to that trading room and it said, this is so oversold, all the indicators are too low, you've got to buy it, but it's below the 50, the odds are against you that it's going to be working out. Sure, it may work every once or twice. I'm not saying it won't work every once in a while. But I'm going to show you a ton of examples where it doesn't work. And over time, it's just like the slot machines in Las Vegas. Those are designed to give you a winner. All right? They're designed to give you a winner, to give you this false sense of security that it's actually working. But they're actually designed to give you a winner so that you can stay there. Because if you stay there long enough, you're going to give all your money back. It's no difference with buying below the 50-period moving average and selling above. Sure, you're going to get a winner every once in a while. You're going to think, oh, I'm not going to listen to that guy, Steve Primo. His stuff doesn't work. But if you stay and do that long enough, over time, you're really not going to see any results. And you'll either fall into that 80 percentile or that 15 percentile where you're just kind of breaking even. But you're not going to see the type of results you want. So let's look at the process, and I'm going to show you how simple it is to actually apply this. Remember, you can use any strategy or technique. I don't care what it is. I'm not going to try and tell you that you have to use this strategy. This is the only way it works. I don't care. You can use something that's based off astrology. That's fine. But just continue to use this buy-sell line process. All right, let's look at that original chart we started out the presentation with. All right, remember we came up with the analysis. The market's going lower, right? Lower lows, lower highs. We have two bearish engulfing patterns. Okay, we have resistance. All right, this is where Steve says to be in sync with the market. Well, I'm in sync. Well, remember, This is the same analysis I used to use. That's why I know so much about it. I used the same analysis some 44 years ago, and it didn't work in terms of being consistent for me then. So don't imagine that it's going to start working tremendously right now, okay? First thing we want to do is be in sync with the market. And obviously, we were out of sync with the market. So here's the process. And we're going to show you, remember, everything you're going to be seeing today is on our platform, the PTS Primo charting platform. As you can see here, in our upper green strategy tab, we have all our strategies and all our methods. We want you to first click on the buy-sell line, all right? And we have different ways in which to view it. Let's view the simplest way, which is just the 50-period moving average, all right, this feature. And remember, once we've plotted it, ask yourself, where is price in relation to the buy-sell line, all right? As you can see, right when I wanted to sell, where was price? It's above. So are we ever going to be selling above? No, if we want to be a consistent trader and not be in that 80 percentile, we don't take that. And therefore, you would not have had a losing trade. You would have been looking at this as a buying opportunity. Just simple this is. Remember, trading is really simple. It's the trader that makes it more complicated. It's the trader that says, well, you know, the supply and demand is really bad here for this company, or the earnings didn't meet results, or, you know, I'm not going to wait till that economic indicator comes out about the jobless claims, so I'll wait to hear what those. I stopped looking at those things 44 years ago. And if I'm still here, I'm just proof to tell you that you really don't need those things. Okay? Let's look at this example in PINS. This is an old example as well. All right, let's say you use the analysis that I was taught some 4 decades ago. Well, there's major support. You've got to follow the institutions, right? In fact, they're the big money. They're never wrong. And they've got, you know, a lot of money behind them, and they're buying right here. So there's major support. So I don't want to go against the institutions and the big banks. So I'll buy right here, right at the bottom. All right? This is the way most traders make their decisions. And look what happened, okay? What happened to that support? Well, they pulled out. They left their order out and they said, no, we've changed our mind. So why would you follow someone who's going to change their mind and not want to be a buyer after a day? I used to trade with the institutions. They used to enter orders in my book when I was a specialist on the floor of the stock exchange. And they had one of the worst track records I'd ever seen of any trader. The institutions, they were always changing their mind. They were always, you know, buying at the wrong places and selling at the wrong places. So I would never follow an institution. And I don't care what course you say that is tremendous. It just, to me, the institutions would be, you know, like following someone who's never traded before. The only reason they're around is because they have the big money behind them to enter these orders. What is the market telling us? Well, the simple way to do that is to click on the buy-sell line, click on 50-period moving average, which is what it is, and then ask yourself, where is price in relation to the buy-sell line? Now, I don't care how much money this institution has. I don't care how this tremendous system that's never failed. I don't care how much this guy is successful on TV. It doesn't matter. The odds will be in your favor that you should be selling and not buying below the 50-period moving average. So you would have saved yourself a lot of losses there. This is why most traders end up in that 80 percentile. They're out of sync with the overall trend. So you wouldn't have bought and you would have saved yourself a nice trade there. Now, as a rule of thumb, you want to look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established. In other words, just because you have one close above does not mean, oh, well, I guess we're in an uptrend now. Or just because you have one close below the 50-period moving average, say to yourself, well, I guess we're in a downtrend. No, you need at least 3 to 5 bars to give you that assurance. For example, as we look at this chart here in big, okay, we were originally above the 50-period moving average, and we have 1 or 2 closes here, but now we have 1, 2, 3, 4, 5 closes below. So that's enough to tell us that the overall trend is changing, all right? It's not changing because of the indicators. It's not changing because of the support and resistance. It's not changing because of the economic report or the earnings. It's changing because the market is telling you most likely it wants to go lower. So we're going to be in sync with the market. Remember, that's our only goal, to be in sync with the market. We don't care what the reasons are. So right here, you can make the decision to start looking for sell signals, or you can make the decision to pull out and say, I'm not going to be a buyer in big. And that would have been a great choice because look what happened, okay? There was nothing you had to analyze. There was nothing you had to go and look through the inner workings of the company. You just listened to the market. Now, all of a sudden, after a couple of months of downward trend, it starts rallying and it starts getting close up to here. But remember, we need 3 to 5 closes above. So this is not enough right here. But then look what happened. We went a little below, and then now we have 1, 2, 3, 4, 5 closes above. So at this point, if we were still short from this level, or if we were out of the market, now it might be a good time to get back in. Now, remember, this is not a strategy. It's not a system. We're not saying, well, if you have 5 closes above, buy at the market. No, that's what strategies do. This is just a tool to tell you which side of the market you should be on. You still have to add some structure in the form of a strategy. Could be one of yours, one of mine, something you've made up, something you purchased from another so-called teacher. It's up to you. But this is not something to tell you buy at the market or sell at the market. It's just telling you whether you should have a buyer's bias or a seller's bias. And right now, BIG is telling us to have a buyer's bias. So you have 5 closes above, and look how well that worked out. The stock jumped 20 points in the next month, okay? You see how simple this is. There's nothing you have to overthink. Don't overthink your trading. Now, here's an example of how this is consistent. And by consistent, we don't mean that consistent means that, well, Steve says it's consistent, so this works every time. No. Remember, consistency means that every once in a while, it will fail you. But a consistent method, a consistent concept is one that's able to recoup those losses. For example, we have a total of 5 closes above here. Let's say that your strategy said, well, right here, I'm going to go long. Let's say I'll go long on this little breakout, okay? And you would have gone long, and for 3 or 4 days, it works out pretty well. But then look what happened. It starts to really go against you. And if you're still holding on, you don't have a profit here. You have a loss, and you're starting to wonder, well, gosh, maybe I shouldn't have bought that. So look what happened right here. You have 1, 2, 3, 4, 5, 6, 7, 8, 9 closes below. Even though it appears, if I go back, that the market is going sideways, the market is actually not telling you. It's screaming that it wants to go lower. So the best thing would be to lick your wounds, and when you bought somewhere around here, to exit. And if you wanted to be more aggressive, you could go short, looking for a short setup. Or you could just say, I'm going to get out of this altogether. And that would have been a wise decision, because look what happened to the stock in the next week. Okay? You see how the market was telling you it wanted to go lower, even though it was just going sideways. The market is always telling you what it wants to do. The only trouble is we don't listen to it. We are already trained in the beginning to listen to someone tell us what it's going to do. We listen to some guy on TV after the close of the day. We listen to somebody in a chat room or a trade room. We listen to someone in a blog or an institution, but we never listen to the source. The source is the chart in front of you. Now, you're still not convinced of the importance of the buy-sell line? I know a lot of my students, it takes them a while to get convinced. They have to go through a number of losses before they are finally convinced, and they say to themselves, wow, okay, I guess I'm going to change my ways, because this really does work over time. But if you're still not convinced, let me share with you another couple of charts here. All right, here's a chart of the Dow on our platform, okay? As you can see, the Dow was heading up, and then we start to kind of go sideways for a while. Now, here's the only thing I want you to check out. This is not a current chart of the Dow. If you look down at the dates down here, this is October 1987. Now, I know a lot of you aren't familiar with that, but I was on the trading floor during October 1987, and that was a very, very, I should say, challenging time. But before we get into that, let's apply the buy-sell line. Now, as you can see, the market was telling us it wanted to go higher until we got into September 87, and we started to have a series of 3 closes below, followed by maybe 3 closes above, but then a number of closes below, followed by a few more closes above, but then more closes below. So this is a very early warning sign. This was the market telling us that, well, listen, whether you think we're going higher or lower, we're kind of in an indecision pattern with a bias towards the negative side, because we're having more closes below than we are having above. At this time, you should take caution. If you're a more aggressive trader, go short. Look for short signals. Remember, you don't just sell at the market. You have to have some structure in the form of a strategy or a method that tells you where to sell. This is just telling you what side of the market to be on. So look what happened right after that in October of 87. This was the crash of 87. I was trading on the floor during that time. And this is the actual crash right here, this one day. Now, this was comparable to a one-day market drop of 5,000 points. A lot of people think that this was the crash. Actually, the crash was this one day. We fell a good 5,000 points, roughly comparable to today, prior to that. So we're talking about 10,000 points in today's market in just a couple of weeks. You think it could have helped you then? Or how about this chart? Here's a weekly chart of the spiders, okay? Same thing, we're kind of going up, and then all of a sudden we start to oscillate above, below, above, below. Here's the deal once again. This is not a current chart. This is January of 2008. As you can see, most of this is prior to that. This is in 2007. On this weekly chart, we have 1, 2, 3 closes below. And then we close above for 2 bars, and then what do we have here? Another 1 close below, 1 close back above, and then 3 more below. This, once again, is indecision with a negative bias. We're having more closes below. So at this point, on a weekly chart, looking at the spiders, which represents the S&P 500 index, someone would say, well, listen, there's a negative bias here. The market still isn't falling out of bed, but you know what? I'm going to stay on the sidelines. And that would have been a wise decision because that was the beginning of the 2008 financial crisis. Now, most people were caught off guard. They didn't find out that we were really going lower until mid-portion of 2008. But you would have had advance notice looking at this weekly chart just by applying the 50-period moving average. Remember, the market tells you just about 99% of the time what it wants to do in advance. Unfortunately, we never listen to the market. We're listening to some earnings report or the economic conditions, or we're listening to some guy on TV. Learn to listen to the market and get rid of all that, what my mentors called useless outside noise. And that's when you'll start to become consistent. You can start doing this right away. Now here's another chart. This was in 2008. Same conditions apply. We're going up and then we start to flirt with 3 closes below. Enough to tell us that we should be careful. And the Dow Jones fell 4,600 points in just 3 months, okay? So go back and do some research. I want you to look at your last 10 to 20 trades. I can almost guarantee that your losses were due to the fact that you were out of sync with the buy-sell line, okay? I'm sure as I said before, you are going to have some winners where you have buy situations below the buy-sell lines, and you have some great sell situations where your sell is above. I'm not going to tell you that won't happen, but remember, it's about consistency. 1 or 2 great winning trades are not going to sustain you, just the way 1 or 2 great trades some 40 years ago with the guys I knew on the floor didn't sustain them. Most of them are not trading anymore. What you need is longevity. That's what will help you not to have just a good month or a good year, but a good decade or 2. That's what I'm trying to instill in all of you as my potential students. So go back. If you don't believe this, go back and look at your losses. Most of them were due to the fact that you were out of sync, okay? Now, here's what I want to do. As you look at this disclaimer here, I want to look at some recent charts. We're going to toggle over onto our platform and show you some stocks that were in the news lately and show you how well the buy-sell line helped with determining a lot of the direction of these, okay? But please remember, I'm going to show you some performance results using this. Please remember, since we are an educational company, we can in no way guarantee that any of the results I'm about to share with you will be repeated. All examples are strictly for educational purposes only. And I'm also going to show you a way to view these a lot differently. For example here, let's look at this chart here in Pfizer, okay? We're going to look at a lot of stocks that have been in the news and a lot of stocks that people have been watching. As we look at Pfizer right here, originally we were going lower coming into March, and since the last 2 or 3 months, we've been pretty much going straight up. Okay, now we tell you to apply the buy-sell line, which is simply the 50-period moving average. And most of our students will do that and they'll be amazed with it until after a while they'll be lured by some webinar where they have this tremendous system that never fails and they'll forget to use it. So Pro Traders Strategies and I developed the platform to make it simple and so that you can always see the buy-sell line 1 click away. Here's what we do. On our buy-sell line, here on the platform, all you have to do is click this on, and here are the different options for viewing it. Let's look at the most popular, as the simplest way to view it, is with the fluid buy-sell line. This is simply the 50-period moving average, but anytime price is below, it automatically colors the screen reddish orange. Anytime price goes above, it automatically colors the screen blue. So now it's a lot easier to see. And if you had this on your screen all the time for any trade, any market, any time frame, it would make it simple and you wouldn't have to ask yourself that question because it's right there in front of you. So we knew now, as early as mid-March, almost a couple of months ago, we had this 1, 2, 3, 4, 5 closes above, that Pfizer was telling us it wanted to go higher. All right? Not some, report about the vaccine or what was going on. It was telling us it wants to go higher. So at this point, excuse me, you start looking for a strategy or for some method that looks for a buy setup. That's it. And this was roughly at about, 5 or 6 points lower in the last month you could have made. Here's another example of a stock in the news, Peloton, okay? Lately, some bad news came out about its product that is causing some serious injury. And so the stock has been falling out of bed since that news came out. Well, it's funny, we've been going lower for a long time. Had we applied the buy-sell line, you don't have to wait for that news because the stock, Peloton, was telling us back in February, it wanted to go lower, roughly about 130, 135, okay? So why would you wait for any news when the stock told you in advance and roughly about 50 points higher that it wanted to go lower? You see how you have the odds in your favor that once you cross over, you should only look for sell signals or simply get out of the stock altogether. Let's look at Facebook. All right. Facebook has been going up, and right here back in March, 1, 2, 3, 4, 5, we had consecutive closes above. This was roughly about 280, and the stock is now up roughly about 40, 50 points higher. Twitter has been steadily headed lower. We had a really sharp down day here, closing roughly about 65, and then gapped down to about 10 points lower. That's funny, because a week prior to that, the buy-sell line was telling us to get out. Now, obviously, there was some news or some announcement which caused that stock to gap down about 10 points. How did we know, how did our students know to be out of the stock or to look to go short a full week in advance? You see, trading is really simple. You don't have to overcomplicate it by trying to figure out things about earnings or announcements or, what some guy says on a chat room. I would be doing you a disservice if I was telling you how to trade. I'm trying to teach you these things so that you can make your own decisions. Let's look at gold. All right, this is GLD, the ETF for gold. Now, gold has been going up, but prior to that, for 2 or 3 months since the beginning of the year, gold had been consistently headed lower. All right, so if you were out of gold, but were thinking about getting in, now here is where you would have wanted to take advantage of that. Roughly when the ETF was trading about 165. And right now it's about 8 points higher. Now, why overcomplicate it by looking at economic conditions or worldly news? It was telling you almost a month ago it wanted to go higher once it had consecutive closes above the fluid buy-sell line. Okay, FSLY. This stock has been steadily headed lower. It's trading roughly around 40, 42 right now. But when it was up here around 80, 75, 80, it was screaming it wanted to go lower. So why would you buy this or hold on to this position when it's telling you I want to go lower? Remember, being out of sync with the market is at the root of your losses. It's not because your method doesn't work, or it's not because you don't have enough experience or you're not educated enough. It's because you're out of sync. Why would you buy this when it's telling you it wants to go lower? As we look at BNTX, same thing, okay? Right here when it crossed above, even though it was kind of going sideways, it was in the sell zone. But right here when it crossed above consecutively in April, beginning of April, just about a month ago, when price was at 120, it was telling you, I want to go higher. So that's the time, if you have your own method or if you have a technique, that's the time you start looking for buy setups. That's the time you start applying buy setups to this, and the stock went up to the 200s. Now it dropped down below. At this point, people are saying, well, it's time to get out. Well, actually, no. Since we're still in the buy zone, this may be a buying opportunity. As you can see, when it got down to 150 roughly, it's bounced up over 30 points. As we look at Penn, this is a gaming stock, all right? A lot of traders are in the gaming stocks, and they were doing really well from the beginning of the year up until mid-March. But in mid-March, who cares what the news was? Who cares if companies are making money and not making money? Who cares if people are interested in gaming? It makes no difference. Don't overcomplicate your trading by overthinking things. What is the market telling you? It's telling you that 1, 2, 3, 4, 5 closes below here at roughly 105, 110. So who cares if the companies are making money or not, if people are interested in gaming or not? The stock is telling you, I'm in a downtrend, an overall downtrend. Probably best not to buy me now, to exit the position and just wait till we close back above. This was roughly about 105. The stock is now down in the 80s, okay? You could have saved yourself a good 20, 30 points by exiting the position. Now, who cares if the stock is going to make money or if people are going to be wanting to be into gaming? We'll just wait till it gets back above the buy-sell line. That's when we'll start looking for buying opportunities. Now, Costco, COST has been going straight up, all right? How could we have known? This is what so many traders love to do. They love to play the victim game and go, gosh, I missed that, but the market looked terrible. Who knew that this was going to go up? I didn't know about the earnings. I didn't know about what was going on with the market. Well, we don't either. We don't teach those things in specialist trading either. In fact, we dissuade our students to look at those things. We don't, it's your choice. Once again, we're never going to say you shouldn't do that, but it's up to you. Remember, all you need to do is apply the buy-sell line, in this case, the fluid, and then ask yourself, where is price in relation? Now, at this point, from the beginning of the year all the way up into mid to end of March, we were below. But 1, 2, 3, 4, 5 closes above. At the end of March, the stock was at roughly 350, and now it's up roughly about another 30 to 40 points since then. Etsy, another stock that has been heading straight lower, okay? In fact, the last week has been terrible for this stock. It's fallen roughly from the 200s down to the mid 150s. How could we have known? Well, we apply the buy-sell line, and right here we were above until we had 1, 2, 3, 4, and then we had one close above, but right back down. So this gave us plenty of time, if we were long, to get out of the stock roughly around 205. And now it's trading about 50 points lower. You see, this is not just something to tell you to trade with, to go short. If you're in a position, this is something to tell you, well, you may want to exit or to raise your stop or to maybe sell a portion of your shares, because it really would have helped. As we look at beyond, all right, same concept here. The stock has been steadily headed lower. It's down to the low 100s. But roughly when it was right here in the mid 100s, about 50 points higher, 40, 50 points higher, it was screaming to get out. And until we have consecutive closes above, the stock is telling you probably better not to buy me. All right. Now, lastly, let's look at the ETF or the S&P 500 index, the spiders. All right. So a lot of people are saying, wow, this market, it just looks so terrible. I mean, the stuff, the bad economic indicators, the stuff about the jobless claims yesterday, I mean, that's bad for the market. Well, we don't look at that. All we're looking at is where price is in relation to the buy-sell line. And in November of last year, it told us it wanted to go higher. It was roughly trading around 350. And look where we are right now, about 75 points higher. Every time we came down here, we had one close below. Remember, that's not enough to get you to go short or to be negative. You need 3 to 5 closes below. Here we had another close below. Here we touched it and bounced off. So until we close below, the market is still in an overall uptrend. It's as simple as that. There's nothing you have to calculate or overthink. And you can start doing this as early as today. Okay, let's recap before we go into question and answer portion. Remember, here are the things you need to do. First of all, apply the buy-sell line. That's the 50-period simple moving average. You all, just about every one of you, have access to that right now. There's nothing you really need to do. Any platform you're looking at, you should be able to apply the buy-sell line, which is just the 50-period simple moving average. I don't care if you trade, a lot of students say, well, Steve, I trade, 5-minute charts of the E-mini futures. Well, so do I. And I have a 50-period moving average plotted on there, okay? It makes no difference. Just apply whatever market, whatever time frame. Step number 2, what you want to do is use the 50-period moving average. And remember, we have a different way to apply that. we have the fluid buy sell line. That's another way. Most students will use a 50-period moving average until they get too complacent and they say, well, it's working great for me, but I want those home runs. Okay, I heard this webinar the other day, and the guy promises that I'll retire in the next year. So that's where most students start to lose it, and they start to say, well, maybe I shouldn't apply this because this stuff always works. So what we did was we developed the PTS Primo charting platform to ask the question, where is price in relation? Okay, and it automatically does that for you. Where you use the fluid buy sell line, you'll see automatically if price is above or below because it colors the back of the screen. Okay, but you must ask that question. I don't care if you have some strategy that's been working pretty well for you. Ask yourself that question before you pull the trigger. Where is price? And I think you will increase your odds for consistency even more. Now, as my mentors taught me, remember, being consistently out of sync with the market is the root of all your losses. It's not because you have a faulty system or strategy. It's not because you don't have enough experience. It's not because, you just feel like I'm not educated enough in the market, Steve. No, most of it is because you're out of sync. If you buy something and it goes down, forget about the earnings. Forget about the economic indicators. Forget about what some guy said on TV. The basic common denominator is you're out of sync. The same thing is if you sell something and it goes up, forget about the reasons. You're out of sync. If you can be in sync, you will hopefully be able to be out of that 80 percentile and join that 5 percentile of traders that consistently generate profits. Okay, as a way of thanking all of you for taking time out of your Saturday morning, we have a great attendee discount today. We're going to give you a great offer. This is our bootcamp course. This is our trend trading special. More and more techniques specifically designed to get you in sync with the trend. Not only the overall trend as we share with you today, but the short-term trend as well. We have aggressive and conservative ways for trading with the trend. We also share about entries and exits and stops within the trend. So we're going to offer you this great course, but we're also going to include, on top of that, a trading strategy. You're going to get all the complete entry, exit, stop placement rules, as well as different versions for trading strategy number 1. This is our most consistent pullback method. Now, if you're not familiar with what a pullback method is, it likes to buy at lower levels in an overall uptrend, and it likes to sell at higher levels in an overall downtrend. So if you're the type of trader that doesn't want to buy high and sell higher, but you like to buy low and sell higher, this is a great strategy for you. For example, here's an older example of how it generates signals. Now, as you can see here in this older chart of the spiders, the market was heading lower. Most traders, once again, would be out of sync and saying, well, we're in a downtrend. But the overall trend was still up. And strategy number 1 generated a buy signal right at the very bottom here of the sell-off. And you could have potentially captured 8 points. Now that 8 points actually transferred over, since it's the ETF for the S&P 500, nearly 700 points in the Dow. So you could have used this as a market directional tool. But we're not going to stop there. We're throwing in the bootcamp course, plus we're also giving you a full-fledged strategy for taking time out of your Saturday morning. We're also going to give you some extra bonuses here. In fact, we're giving you a total of 12 trend trading bonuses. You're going to get the online course, but you're also going to get our entries course, our exit course, stop placement course, our buy sell line scanner, a full gamut of ways in which to capture the trend, all, at higher prices here. But here's the best thing I feel about these 12 extra bonuses. If you look down to bonus number 12, it's 6 months of the PTS Primo charting platform. Okay, I developed this with Proprietary strategies to make trading simple. Now, here's what you get on the platform, included with all the other bonuses and with the strategy. Obviously, you'll get the pullback strategy, one-click access that automatically tells you where the buy and sell signals are. You get the 4 separate features of using for the buy-sell line. You'll also get proprietary exit levels. With one click, you'll find out up to 4 different exit levels for each strategy signal. You'll get our top-bottom 25% tool. Okay, this is another way to tell the short-term trend, not only the overall trend, but the short-term trend using pattern recognition. They'll get our signal scanners. You can scan on a nightly basis for these signals. A strength of trend tool I developed with Proprietary strategies, which can tell you with uncanny ability when a trend is running out of steam or whether it still has a lot more momentum left. This all comes with personalized tech support. So this is what you're going to get for 6 months. Now, normally 6 months of our platform would cost close to $900. We're throwing that, once again, absolutely free. There's nothing you have to pay. This is part of this great offer we have. So let's break it down. Here's our Saturday morning discount. If you purchased all these things separately, our bootcamp course for covering all these ways to determine the trend, our strategy number 1 course with the complete entry exit rules, different aggressive as well as conservative ways to trade it, along with 6 months of the platform, which comes with so many other extras, up to 4 decades of things I've accumulated. If you broke this down individually, it would cost you over $8,400, close to $8,500. But here's what we're going to offer you today for a limited time only. Today only, in fact, $297. You're going to save over $8,100. All right, this is a fantastic offer for less than $300. And I can almost venture to say in the last month, I would say that many of you, not all of you, but many of you lost more than $300 just trading or trying to make sense of the markets, okay? Why not take control of your market for the very first time? Take control of your trading the markets, okay? A year from today, you will have wished you became a member of all these courses. Remember, you're getting over 4 decades of information, things I've accumulated right there, 1 click away. Start trading in the right direction. Here's how to take advantage of this great offer. Remember, $297, that's all it is. Contact my sister site, which is Proprietary Strategies. All right, you have their email address right there. I would suggest the easiest way to contact them to sign up so that you can be up and running as early as today is to call them directly at area code 310-598-6677, which you see right here. They have trading consultants manning the phones right now. They would be more than happy to take your order over the phone, or they can answer any question you have about tech support or strategies, or maybe you want to switch the strategy for another one, or maybe you're already a platform subscriber. Maybe you'd like to get something else. So they're very flexible. There's absolutely no obligation. They're happy to work with you. I would suggest giving them a call right now, okay? And if you want to sign up for that $297 offer, they can take your order over the phone. Now, that link you see at the very bottom is the link that will take you to the information page. Also, you can sign up online if you'd like to. That's not a live link, but they've just posted a live link on the chat box on the GoToWebinar column on the far right. So if you want to click on that one on the GoToWebinar column, that will take you to the information page and the sign-up page as well. Now, I promised you I would reserve the last portion of today's presentation for questions, and I'm keeping my word. So if any of you have questions right now concerning what I just taught, just go to your question and answer box on the GoToWebinar column, and I'll answer them right now, okay? First one, great presentation. Thank you very much. Clear and transparent. I've been doing most of what you suggest. I follow about 10 stocks. How do I scan the market to find very liquid stocks that have had days below the buy-sell line? Great question. Well, on the platform, you know, you have the scanner. You can scan for the buy-sell line right off the bat. We have the scanner right there, which is included. So you can scan for which stocks are below or which ones are above. Then there are many other ways to detect. We have other scanners. There are other scanners, the top rated stocks, the stocks that there are just so many scanners. I would suggest contacting Proprietary Strategies to tell you about all the different features. I just don't have time right now, but we also have features that will tell you about stocks that are overperforming, stocks that are underperforming, and the high ranked stocks, the best ranked stocks, the lowest ranked stocks. And that's the best way to do that. And you can scan for those as well. And those are also on the platform, and they come along included with this offer. Remember, you're getting all of this. So there's so many other things included on the platform. Now, if you have the platform right now, let's say perhaps you weren't aware that you had these capabilities. So once again, contact Proprietary Strategies. They'd be happy. Talk to your trading consultant, and he can explain them to you and show you exactly which ones to use that may help you. But right off the bat, if you're using the buy-sell line, if it's helped you, but you want to find these stocks that are getting ready to take off, there are a number of different ways. Also, that strength of trend tool that I shared with you. I've given webinars before in the past. That's also on the platform that you can use. You can look for stocks that their trend, if they've been having trends to the downside that are running out of steam to the downside, and they may be getting ready to go up. There's a lot of different ways to use all the different features, and you all have access to them with your 6 months of the platform. So once again, I would experiment with what is available there or contact your trading consultant at Proprietary Strategies, okay? Good question. Next one, does this work on intraday trading the currency pairs? Yes, it does. Okay, we have a number of students that use this with the currency pairs. We have data for the currency pairs, so if you want to scan for those as well, you can scan a nightly scan or intraday scan as well for currency pairs. All of the most prominent ones, the British pound, the euro dollar, and you can do the same thing because they trend very strongly as well. In fact, if you're a currency pair trader, apply the 50-period moving average right now. You can see how well it's worked with a number of currency pairs. One I can just think off the bat is the Swiss franc, or another one is the Canadian dollar. Those have been going really strongly down to the downside, okay? And look how the buy-sell line could have helped you just applying it to those currency pairs right now on a daily time frame. So it does not matter whether you're looking at daily bars, intraday bars. I currently use the buy-sell line on intraday trading of the E-mini futures. That's the market I like to trade because of my limited time. Most of the time I'm teaching or trading or answering emails. I like to, when I have a free moment, I like to day trade because that's my background from day trading on the floor. So I use it on 5-minute charts, on tick charts. So it's as simple as that. It really is that powerful. But remember, this is not a system. This is not telling you to buy because we're above the 50 or to sell because we're below. It's just telling you which bias you should have. It's telling you what zone the market is in. Once you know what zone you're in, then you must apply some structure in the form of a strategy or a technique. All right? It's not just enough for it to close 3 times above and then say, well, Steve said I could buy right now, so I'll buy at the market. That's not the way it works. It's just a tool. It's just a warning system telling you what the market wants to do. Now you have to apply some structure. Think of it about the same metaphor I constantly use, and a lot of students say I overuse it. I always use and symbolize the market as a river. Okay? If you see that the river, while you're walking down it, has a nice current to it, well then great, but that doesn't mean to jump in. You have to have a boat or some type of tool or some type of inner tube to get you down the river. All right, that's the same with the strategy. You need to have some structure to trade that current, to navigate down that river, okay? So this is not something that you simply say, oh, I'll buy at the market or sell at the market. And the good news is, with this $297 offer, you're going to get a full-fledged strategy. This is one of our best strategies. I've tweeted about strategy number 1 signals before. If you go to our Twitter page, you'll see them, and it's a great technique to trade, okay? Yes, someone is saying you have aggressive and conservative ways. Yes, and when they're asking what we mean by aggressive and conservative. Well, strategy number 1, we show you how to trade it aggressively and conservatively. We're talking about risk. So a lot of traders say, listen, I don't mind taking a lot of risk on because I have a big account, or I don't, worry about risk that much. I can sleep well at night. Whereas there are other traders that say, no, I don't want to have risk at all. I want as little risk as possible, and I want to sleep well, and I don't feel comfortable holding a lot of risk overnight. Well, that's what we mean by aggressive and conservative. So we show you the different ways to do that with strategy number 1, okay? You said educational correspondence. This is a question. Yes, educational correspondence means you get my personal email address. So each and every one of you, once you sign up for this offer, will get my private email address, and you can email me with questions. I answer questions all the time. I had a question on Friday, and I was slow, which was very great, and I answered the question within the next 5 minutes. And I remember the students saying, wow, I can't believe this. You answered it right away. Most platforms and things I purchase, it takes a week to get a response. No, we try to answer everything within 24 hours, okay? So if you ask me a question, I don't care if it's something I taught or if it's something you want me to review some of your work. Once you're a student of mine, you have my personal email address. You can contact me whenever you'd like. I'll most likely get a ton of emails from students over the weekend. I will try to answer them as quickly as possible. So that's one of the other things as well. It's like having your own personal mentor there sitting right next to you. And because, we want to teach you. We really want to show you how sincere we are in trying to teach you how to trade and become a consistent trader, okay? Okay, good questions. If there are no further questions, we're going to conclude, but I just hope that you really take advantage of this great offer. Remember, you're going to be saving over $8,100. You're going to get over 40 years of experience, 40 years of things I've accumulated that will be right there at your fingertips for only $297. Okay, I can't think of a better offer, just showing you that we really have a sincerity in trying to teach you how to trade. So as we take one last look at our disclaimer here, I just want to thank you so much for attending today. I hope you learned something. We always try to teach you something. Even if you do not decide to become a student of mine, we always like to teach you something so that you can elevate your trading. But as you exit right now, I just want to say thank you once again for attending, and I do look forward to all of you becoming students of mine in this trend trading course, okay? Thank you so much. Have a great weekend, and hope to see you in class. Bye-bye.